We've entered a new era of accounting and finance. No longer is it necessary to suffer through um, manual-driven accounting and month ends. Instead, high-performing organizations are automating time-intensive and repetitive tasks to free up time and are achieving meaningful financial change by providing real-time analysis to support data-driven strategies. To help us put perspective on this, we're delighted to have Molly Boyle from BlackLine here today. Molly is a highly experienced accounting transformation expert who will share with us some of the main challenges organizations face, how to overcome key stumbling blocks, and what the real business impacts and benefits are of transforming accounting operations. So with that, I'd like to hand over to you, Molly.
Great, thanks, Jesper, and hello, everyone. We're going to go ahead and get started here today. All right, so as Jesper mentioned, everyone, this is our agenda today. We're going to really cover what are some of those challenges and what happens because of the challenges that accounting departments are facing in today's modern business world. And really, the point of today's discussion is why it makes sense to think differently, why it makes sense to move past maybe those legacy processes and those traditional, status quo manual accounting processes, and what do you get for that? What are the benefits of transforming, and how should you maybe think about approaching that? And lastly, we'll talk a little bit about the impact that technology can have on your accounting resources, which is one of those key benefits. And lastly, we'll cover a bit about the BlackLine platform to make sure everybody is familiar. So to kick things off today, let's talk about briefly what a traditional record to report process looks like. I'm sure for many of you who've worked in the industry for a while, you're familiar with sort of this continuum of record to report that happens on a monthly basis. This probably looks familiar to all of you. And what we want to think through is when you have this linear record to report process, which you're repeating, and these processes involve manual effort, what happens as a result of that? So I wanted to just briefly show this slide to kind of ground all of us in what the traditional process looks like in terms of month end. And I want to move on now to focus on the challenges that controllers face. I think many of you joining us today are probably controllers or report up to a controller, and these are some of the challenges that we still continue to hear, and many of these are a result of those sort of manual legacy processes, right? So limited visibility is typically a challenge. We hear a lot about companies facing challenges with financial data being stored in disparate and disconnected systems. So accounting teams are spending a lot of time manually validating completeness. They're storing all of their supporting documentation, approvals, backup, and critical substantiation, either in shared drives, in Excel files, or in some cases still in binders. And this makes it difficult for leadership to get a good view of where things stand, to really have that confidence when they're certifying at the end of each month or quarter, to be able to report up where we are, how things are going, what bottlenecks we might have. And then if you have changes or resource changes in your department, it's very difficult to evaluate roles and responsibilities and to sort of reshuffle those items if you can't get that easy visibility. For more staff and maybe senior accountant or accounting manager level folks, there's still a lot of time spent supporting the audit every quarter or year. We hear a lot of pain around prepare by client lists and a lot of recurring meetings required to get an idea of what support is left to be provided, where an audit trail might be available, and so forth. And this is all a result of this detective sort of reactive control environment that a number of companies are still operating within. And we see open items building up on the balance sheet as well, which can present some financial statement risk to companies when you're not able to put those processes in place to clear open items on a timely basis. It becomes very difficult to get visibility to your true balance sheet position or any risk of write-offs. And so those are some of the challenges we see. What happens as a result of those challenges? So, why should we care about those challenges, or why should we think about changing? these are really some of the results of manual processes, right? We hear a lot about talent lately and sort of the war for talent in accounting and finance. And what happens when you have smart people and capable people performing manual processes and spending the bulk of their time on these highly mundane activities, people feel underutilized and underdeveloped. But at the same time, they're working a lot of overtime, and so they might be overburdened and overworked, but really underutilized as it relates to their true potential. And this can cause a risk of turnover. You get these people in the door, and they're excited about their accounting career and looking forward to contributing, and then they realize that their reality is a lot of manual work and a lot of repetitive tasks, and that's what can cause turnover. And I think more broadly within the department, what this means is when you have your accounting resources, particularly those most reliable resources or those most valuable resources, spending their time, a significant percentage of their time on traditional processes or on the close, they're not available to support those other critical initiatives, whether that's a transformation project or an ERP upgrade or just ongoing business activities. What happens is accounting gets left out because the rest of the business and the show must go on. And so when accounting is not at the table, there can be rework required, remediation, and really in the worst case scenarios, financial statement errors that don't get caught because accounting is not involved. And so those are really some of the reasons why we think, and I think based on my experience, that companies should be thinking differently. They should be identifying those champions within their accounting organization that are embracing technology and embracing transformation. So I want to talk a bit about why it makes sense to embrace technology and to think about transforming those manual accounting processes. And I want to do that by talking about these 7 sort of different components. These are sort of key characteristics that executives or leaders might consider when evaluating a project or an initiative like an accounting transformation. So if you think about technology, applying technology and automation to your accounting processes, what does that mean from a time perspective? It should be pretty obvious, but what we see is when technology it gets used to replace manual, mundane processes that are repetitive, you're able to not only balance work better throughout your month and throughout the close process, but you can simply reduce the overall level of effort. So there are fewer days and hours needed to complete that monthly close process. That means you can get those results quicker, and that means those people that were previously bogged down by their month-end close, that time can be repurposed to spend on other activities, whatever that is that your organization needs those accounting resources to be doing. We talked a bit about talent already, but from a talent perspective, what this means is when you're taking your people away from those repetitive activities and giving them a chance to spend more time on whether it's analytics or partnering with the business or focusing on things like new accounting pronouncements or other strategic initiatives, you get an organization from a talent perspective that's much more engaged. You're able to not only recruit them to your company, but develop them and retain them and help those professionals move up and provide new value to the organization. And that can also, from a headcount and talent perspective, help you reduce the amount of headcount that's needed maybe at the lower levels. If one of your goals is cost savings, and we'll get to that in a minute, you can reduce headcount or, again, simply repurpose headcount. I know in my experience as an accountant, leveraging technology, we found that we were able to not necessarily cut heads, but slow down the pace of our hiring so that as the business grew and evolved, we were able to absorb that additional work and absorb that business growth with the same accounting resources we had in place before. From a process perspective, technology is going to help you because it will allow you to have more proactive real-time processes. Instead of putting in place these manual checks and balances and rechecks at the end of your month-end close, you're able to embed some of those controls and some of those checks into your day-to-day activities. So your control environment, which again we'll get to in a minute, becomes more proactive. You're able to streamline that work better throughout the month so that you're embedding activities in your daily processes as opposed to having this peak activities at the end of the month or within a few days of your month end. When you leverage technology, a lot of employees are finding that their user experience is better, that these software solutions and technology solutions for performing their close activities are much more intuitive, and they really automatically drive processes towards a desired state. Having things like templates in place or dependencies and repeatable tasks will help embed those best practices and those processes right into your daily activities, as opposed to relying on, a manual checklist or email to make sure that the appropriate items are getting done at the appropriate time. And again, unnecessary dependencies and sort of manual checks or manual communications about when an item is completed, all of that goes away when you take full advantage of what technology can offer. From a controls perspective, I touched on this, so I'll be quick on this, but really getting rid of those detective reactive controls that are always happening at the very end of the process and that can result in rework if something is caught. You're able to monitor the status of critical tasks and critical items throughout the month if you're leveraging technology. And again, you can put in place rules-based and risk-based processes that are embedded in your tasks, as opposed to requiring individuals to spend their time validating on the back end. From a cost perspective, it depends on exactly what your goals might be, how you can get cost benefits by using technology. But in general, we find that the technology results in a lower cost accounting function because you're putting those resources and you're putting those dollars where they should be spent, whether that's lowering your headcount, whether that's helping your department just leverage its overall spend, or what have you, but you're able to do a lot more with the same amount of resources when you're leveraging technology because you've eliminated those redundant manual tasks, and you're able to reduce a significant amount of the overtime that may have previously been required to complete your month-end processes. From a policy standpoint, you can embed your policies into technology. We'll talk about the BlackLine platform a little bit later, but you'll find that with technology base, you're able to document policies and procedures in the technology so that if you have turnover within your organization or you have somebody new taking on a new process, you can document your policies and procedures right in the location where those items are completed on a monthly basis. This allows companies to rely less on sort of tribal knowledge, if you will, to complete their month-end procedures, and allows for just much better centralization globally. If you have those different systems in place, whether it's different ERPs or different sources of financial data, being able to centralize and have governance over your accounting policies and procedures in one place is another significant benefit we see companies experiencing with technology. And lastly, the result of all that is really a stronger output, right? When you have these automated controls embedded in your processes, you're able to have a much higher level of trust on the financial statements. You're able to have fewer audit findings, and the audit itself becomes a much more efficient process. And as a result, when you can identify issues or risks within your process, your accuracy increases as well. So those are some of the reasons why it makes sense to think differently and to think about embracing technology and embracing this idea of accounting transformation, which is really just sort of a mindset of continuous improvement and continuing to look at areas for improvement and to embrace automation and technology wherever possible. And so from a people perspective, let's talk about what that looks like. If you're an accounting champion in your organization, I think this really applies at every level of the organization. This idea of accounting transformation is not just a buzzword that that's pushed down by the CFO or that's some sort of corporate mandate, but it's really sort of a mindset that's embedded into every level of the accounting organization and can benefit every user, which I think is really exciting. And so if you're a staff accountant or you're an analyst, recently joining the team or maybe performing some of those recurring tasks on a regular basis, if you're thinking differently, if you're thinking like an accounting champion, you should be excited about reducing that manual effort and reducing the administrative tasks that you were previously spending your time on, being able to get transparency into balances and activity across a number of different systems without having to use Excel or access databases to manipulate those files or those results. You're able to spend more time on analysis, and you're able to call out errors proactively as opposed to maybe somebody else finding an error later and pointing the finger back at you. But if you're a manager, you're approving, maybe you're that first line of defense, you've got a group of staff accountants or analysts reporting up into you. What does that mean for you? Having technology in place can really help those managers and reviewers focus their time where they should be spending it, and that's on those higher risk judgmental areas, right? You can get, if you're a manager and you have 10 staff reporting to you, you may find in a manual environment that those 10 individuals are doing the same similar task, but all slightly differently, and having technology in place can help drive consistency and quality across those different users, really allowing you to have accountability and to measure your workforce on their output. You can get visibility again to not only trends or analysis that are being performed by your staff, but if there are adjustments and issues that are identified throughout the month-end close, you can report on those very quickly using technology. And you're able to eliminate certain reviews that maybe would typically were a check the box activity if you had to look at a zero balance account or something to that effect. Using these rules-based techniques and using automation to drive how you're spending your time allows you to just reduce or eliminate certain unnecessary tasks or reviews that maybe you were previously performing. If you're the controller of an organization, it's probably pretty self-explanatory, but you as a supervisor or as sort of that high-level reviewer in the accounting organization are now overseeing a control environment that has less emphasis on those sort of detective controls and much heavier emphasis on those preventive controls. And so, again, you're spending much less time relying on those back-end processes to catch issues and errors, and you can be much more proactive about how you produce your results and how you communicate activity real time. You can give financial insights, you can retain that talent that you've worked so hard to bring in and recruit, and you can start to be seen as more of a trusted business partner and less as sort of a back office function working on last month's results. And as a CFO, sort of sponsoring or facilitating this broader transformation, what you get out of this is really an inspired and engaged accounting organization that rather than being those, those bean counters or those back office, support staff, you become, again, that trusted business partner. Your organization is sort of a model for the rest of the organization, and you're able to have a continuous improvement mindset, which is much more conducive to supporting the broader business. So here's just a summary again. I think top to bottom, you can see true tangible impacts of thinking differently or thinking like an accounting champion, and it should be exciting to think about the entire organization getting something out of an initiative like accounting transformation. But one challenge is, where do you get started? When I talk to companies all the time, I get asked, well, how do we begin? How do companies go after this? I don't know if I have the resources or the project plan in place to get started. And so what I would encourage and what I've seen work successfully for a while now is really just taking it bit by bit, right? So this metaphor, crawl, walk, run, and sprint is really just one way of thinking about how to break down a concept like transformation into executable steps that you can put into place in your organization. So in terms of getting started, it's most important to figure out who's going to be involved. Who are those champions that you want to call upon to get your initiative off the ground? You've got to identify some initial goals clearly, but in drafting your plan and selecting your team, I would encourage you to make sure that you do have a cross-functional and diverse team. Don't just have this be determined by your controller or your leadership. Get your end users involved. Get them to buy in early and get them excited about what this transformation can mean to their daily lives and to their professional development as well. So get that diverse team engaged and identify what your initial goals are. You don't have to have a complete end state in mind. You should have some long-term goals in place as well. But once you kick off that project, the easiest way to get buy-in from the rest of your organization and to prove to people that this is something they should care about is to start with the low-hanging fruit. get that quick win, get that immediate ROI, and start measuring that success. This really starts to generate some momentum within your organization and also gives you that quick win and frees up those resources, which we'll see in a moment, to start spending time on maybe those more complex aspects of your transformation. So by the time you start running, you're able to say, all right, now we've got these initial wins under our belts. How can we optimize those? How can we start thinking about more advanced functionalities and what that next step looks like? Celebrate those wins along the way. These transformations are a bit of a marathon. They're not an overnight turnaround, but they're also, they don't have to be, you know, an overwhelming multi-year project as well. Think about them as small individual components and break them down for your organization and give them a chance to celebrate. And what you'll find is after doing that and sort of repeating that circle over and over again, you create this culture of continuous improvement. You create a team of accounting champions, and you're then able to constantly repurpose time, reevaluate how your team is engaging with the rest of the business, and support your organization in an optimal way. So regardless of what that looks like in your organization, I love that concept of crawl, walk, run, sprint, because it makes it seem more doable for all of us who are already burdened by a lot on our plates. And so I want to talk briefly again about talent and resources and what we are seeing the accounting close process look like when technology is really optimized and embraced. So, sort of back to that legacy processes, this is what we see without technology in place. Those manual processes, your financial close, as it relates to the accounting resources available, looks a bit like this gray dotted line. And what that means is your accounting team is spending a significant portion of their month completely bogged down by their close checklist, if you will. And so they have zero time to spend on these other strategic initiatives. What we want to work towards by leveraging technology is something that looks a bit more like this yellow line, right? So what we have is not only a reduced overall effort each month, but also a much better balance of that overall workload throughout the month. And just taking a closer look at what we mean here, without technology in place, without innovation, accounting isn't always going to get a seat at the table because some of the other strategic business initiatives might be driven by IT or by other departments. And if accounting isn't available, the project must go on. The project can't always start and stop to accommodate month-end close. And so, and quite honestly, accounting and finance teammates are already working overtime, and they don't really have an appetite to take on, another strategic initiative. And so this starts to create problems and rework, and potentially audit issues if decisions are made without accounting involved. And so, being able to free up to 70% of some of your resources' time with technology in place allows them to flex between projects, flex between initiatives. You've got that reduced overall workload, and that means you can accelerate your overall close timeline, and you've got that subject matter expertise from your finance organization available to the broader business. Really, really impactful. And so I want to wrap up my comments today. I know we're running a bit over because of the delay at the beginning, but I want to wrap up my comments today by talking a bit about the platform itself and what BlackLine has to offer for our customers. I'm hoping all of you have heard of BlackLine before, but in the event that you haven't, this is really where we fit in. If you think about that end-to-end record-to-report process over on the left there, you've got your business happening every minute of every day, right? You've got your ERP system, you've got your other sources of financial data, and then over on the far right in the other white box, you have all of your outputs. But what we see in that red area is in the middle of those sort of subledgers and systems of record and your outputs, we've got all these manual processes happening in Excel via email and binders and shared drives and what have you. And that is where BlackLine comes in to address those manual processes. And so you can see here, BlackLine has a number of different functionalities and solutions to address areas like account reconciliations, high volume transaction matching, your manual journal entries, and really just your overall task management throughout your close process. And so to take a brief look at the platform itself, the solutions, which are really just different packages of the underlying products, look a bit like this. And so BlackLine's platform sits all in the cloud. It's one integrated platform. The solutions and the application are ERP and data agnostic, so you can bring in data from a number of different sources into this cloud-based platform in a very secure fashion. And then you can integrate all of these different month-end close processes, again, like your account reconciliations and journal entries, into a single repository and platform that has embedded workflow. It has a rules-based and business-owned approach to it, and it has a full audit trail built in as well. So you can give internal or external auditors read-only access to your information and significantly reduce the amount of time that is spent, not just for your accounting team getting through the close, but on the back end of that, getting through those critical audits and reviews that need to happen. And BlackLine has been around for a while now. We have a number of customers across the globe who are experiencing real tangible results that are helping drive their business forward. These are just a few of the case studies that we love to highlight, some recognizable logos there in global organizations that are, reducing their manual efforts, speeding up their close, reducing those days by up to 70%, and really just improving efficiency within their organization. And so with that, I want to thank all of you for joining today. I hope these comments about transformation have been impactful, and I'm happy to answer questions. I'll turn it back over to Jesper.
Yeah, thank you very much, Molly, for this insightful view on accounting transformation and its potential impact on organizations. I would like to now open it up to questions. We've had a few, so I'll start off with the first one, which is, what do you see as the most important benefit to an organization that embraces full-out accounting transformation?
Yeah, that's a great question, and it's hard to have sort of a silver bullet answer, because I think it depends largely on the organization and the goals. I think there's a number of different benefits, but I think at the highest level, that resource impact is really the number one benefit, because when you can free up those critical accounting resources, the result of doing that can be any number of other benefits, right? It can help you to focus on other initiatives. It can help you retain talent and so forth. So I like to point back to resources and the impact on your accounting talent as really the most critical benefit that you can get from transforming.
Okay, great. Another question that's come in for you, Molly. Is there any overlap in functionality between BlackLine and ERP systems? And what's the benefit of using BlackLine instead of, for example, SAP or another ERP system?
That's a great question, and one that I get all the time. I think the easiest way to simply state that the answer is that BlackLine is really complementary to what your ERP environment is going to bring to the table. So if you have an SAP, or if you have Oracle or Workday or any of these other ERPs in place, those systems are still your system of record. That is your general ledger. Your business, like I said before, is sort of happening every minute of every day in those systems. And many of those ERP providers are innovating to make that, make how you run your business more efficient on a daily basis in your ERP. And many of those ERP companies also have reporting and consolidation solutions for you that can help with that right side of the graphic that we reviewed before. But what we find is really all ERP providers do not address the full end-to-end record-to-report process, and it's that area in the middle with processes like balance sheet substantiation and manual journal entries, which will always be a part of accounting close, that are not fully addressed and are not integrated, not addressed in an integrated way in an ERP system. And so BlackLine has worked very hard to have certified connectors with a number of different ERP providers so that we can truly complement the functionalities that you will get from your ERP provider. So the overlap is very, very little, if any, and these solutions are truly complementary to your ERP environment.
Great. We have time, well, we're running a little bit over time, but we have time for one more question. which I also think is really good, and that is what is the best advice for getting end users on board if we have a lot of accountants that don't like change?
Yeah, that's a great question, and something that I think organizations run into all the time. I think accountants, traditionally are not necessarily stuck in their ways, but proud of their, hard work and the processes that they have built, even if they are manual. And so getting those sort of traditional accountants to think a little bit differently really involves convincing them early on that their lives will be better with technology in place is critical. So I think, as I mentioned in my comments, trying to avoid these concepts of transformation or these initiatives, trying to avoid them being an executive mandate, that's simply pushed down by a CFO or pushed out by maybe a third-party partner, like a consultant. Avoiding that mindset or that approach is key to getting your end users involved. Whether you can carve out a group of super users or whatever, having those folks identified at every level and every corner of your organization as sort of subject matter experts, as super users on your project is absolutely critical. Get their feedback, involve them in the demos, show them what this is going to mean for them on a daily basis, and ask their opinion. When you get people involved and you give them a voice, they're much more likely to buy in. And I certainly found in my experience that having some of those analysts and the senior accountants and accounting managers as key resources on our transformation project were really key to success. And we found that they became some of the biggest proponents of this concept of continuous improvement as we move forward with our transformation.
Yeah, great advice. So with that, we've come to the end of the webinar, and we will get back to those of you personally who've submitted questions which we were not able to answer during the webinar. I want to thank everyone for taking part, and in particularly Molly Boyle for really valuable insights. If you have, or if you would like more information about BlackLine, please visit blackline.com. Thank you very much, everyone.